welcome back to our new trading session number 1. And obviously, welcome to the month of November. Nonfarm Payroll. A lot of expectations for tonight. A lot riding on this, whether or not the FOMC is gonna cut next week. All right, let's do a quick audio check. Should be fine coming out my side. All right. Cool. Again, welcome and thanks for joining us to our news trading sessions. And we're going to start with non-farm payrolls. It's going to be a busy month. Obviously, we have the US election next week and then the FOMC decision on the 7th. And we do have our CPI on the second week, not next week. Okay. All right. My name is Video in General. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reactions to news can be swift and unpredictable, which leads to higher trading risks and delays in order executions. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right, as per usual, we're going to give you the code TW deposit, and you can use that when depositing into your Octa trading accounts. And you should already have access to the private Telegram channel. If you're registered through the website, you should be receiving that on email, or if you have attended previous sessions, then you should already be in that Telegram channel. Okay, so this is the code. It's Nonfarm 2024. It's still valid for another good 2 months till the 31st of December 2024, and then come 2025, we're going to give you a new code, but it is valid until 31st of December 2024. So you might want to jot this down when you want to use it. Make sure you use that when depositing into your Octa trading accounts to get your double deposit bonus. Okay. So a little bit about myself. My name is Vera Injero, and I've been a full-time trader with over 20 years of experience, and I have also been a professional trading coach and technical analyst since 2007 for a lot of global brokers out there, including ones in Australia, America, as well as Japan. My expertise is in the Ichimoku Kinko Hyo technique, and I also own a independent market consulting company called Zenifix. And I've been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATAA and the APTA conferences, which is the Australian Technical Analysts Association and the Australian Professional Technical Analysts. Okay, so that's me with some hair. Okay, so we're gonna go through some of the theories first. I'm gonna talk to you through, what is the Bureau of Labor Statistics, who's compiling this data, what is this data for, how do we look at this stuff. I know some of you guys probably have, some knowledge on this, but if you guys are new and just joining us for the first time, then this is where you want to get your information from. Okay, so what is the Bureau of Labor Statistics? The Bureau of Labor Statistics is a federal agency that collects and disseminates various data about the US economy and the labor market. We are going to be focusing on the labor market this week. And its reports includes Consumer Price Index, as well as the PPI, or the Producer's Price Index, that's going to be released in about 2 weeks' time, both of which are considered important measures of inflation. Now, within the labor market data, the most interesting ones are the number of people employed outside of agriculture, and this is why we call them non-farm payroll, right? We don't count in the farming payrolls. But anyway, it is pretty much surrounding, whether or not people get employed. And that's basically what we're looking at today. We are looking at 3 sets of data, 3 main data. There's a lot more data that's going to be released tonight, but we're going to be focusing on 3. That's the non-farm payroll, as well as the unemployment rate and the average hourly earnings. So just for your information, at the beginning of the year, the agency, the BLS, publishes a calendar with release dates for the whole entire year. So I think a lot of people know when this data is actually going to be released, and it's a good, habit to make every time you start the new year. That you go to the BLS website, and just click on the calendar link. That if you click that on your phone, then it will add those on your Google calendars, or or your iPhone calendars, or Samsung calendars, or whatever calendar you're using. But it's a good idea to have that in there so you know when the releases are going to be at your own local time. Okay, As per usual, if we take a look at what was typically happening, the unemployment data and the non-farm payroll is actually published every first Friday of the month. But if it falls on a holiday, publication usually postponed to the following week. Very rare for this to happen. And typically we do get 1 month where this happened. That's actually the month of March, right? So we don't trade. We don't look at NFP data being released on the first week of first Friday of March. It's typically the second Friday of March. Okay. Inflation data, CPI, PPI, typically published on the following Wednesday after the labor market data is released. But because we have the election as well as the FOMC decision, I think the CPI is actually scheduled in 2 weeks from now. It's not next week; it's the week after. Okay. All right. So, what is the non-farm payroll? The non-farm payroll, or what we typically refer to as the NFP, it's a monthly report that's released by the BLS, or the U.S. Bureau of Labor Statistics, that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. Now, market analysts and investors usually look for NFP figures above 200,000, as it's seen as a positive sign of a healthy job growth in the market, as well as a growing economy. However, we do note that the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. Now, I'm going to take a little bit of a pause here. I just want to keep you guys, up to speed in terms of the context that we're looking at here. Last month, we have a huge surprise on the NFP number. We got 110,000 above the consensus, right? So we got 254,000 or 245,000 last month. That was a huge jump in the NFP when market was kind of slumping down. Everyone thought the labor market is going to be bad, and that's the reason why the FOMC was cutting interest rates by 50 basis points. And then we have that surprise NFP numbers. Now, this month, we are expecting the NFP gains to be a lot less than what it was last month. A couple of factors to factor in. Obviously, it's the because we have the hurricane in the U.S. as well as several strikes that is ongoing in the U.S. and from there we are expecting for the NFP number, if it comes in lower than what the consensus here is, or if the gain is not as high as last month, it's not that big of a deal, right? In terms of the NFP numbers, we do want to focus a lot more on the unemployment rate, but we'll talk more about that in terms of the scenarios. Okay. So the NFP data, it is a crucial indicator of the state of the U.S. labor market and can significantly impact financial markets. All right. A figure that falls below market expectations may be viewed negatively, while one that exceeds expectations may be viewed positively. When we talk about the U.S. Labor data, when we talk about the U.S. NFP numbers, if it is below consensus, then typically most of the time we do see the US dollar kind of weaken with it as well. If it's hard and consensus, then we do expect the US dollar to kind of strengthen. We do expect risk to come and flow into the market if it's a strong labor data, right? It gives a lot of confidence to market participants that the US economy is actually pretty healthy, and that's basically what the market is looking for. It's not really rocket science, but the way NFP is being traded, this is why we have this session tonight, because we need to explain to you how NFP typically moves the market. Okay, so NFP figures, because it's so important, it is closely watched by traders and investors, particularly in the forex market, where currency pairs like the Euro USD, Pound USD, Dollar Yen, Dollar Canadian, Dollar Swiss, Aussie USD tend to exhibit high volatility in response to the report's release. Okay, very important. In fact, a lot of traders actually started trading because some of their friends says, "Hey, you should be trading in NFP because the market moves a lot. There's a lot of opportunity that can be gained out of that." So I think first-hand experience by a lot of traders in terms of the NFP is they're kind of going in blind, right? And even if you have been trading for more than 6 months or maybe a year, sometimes you still don't get the know-how or the hang of how the NFP works and impacts the market. Okay, which is why we're running this every month. Okay. All right. So again, as I said, this is very important, right? Because people that have learned to successfully navigate through this NFP, there are actually repeatable patterns, and the reason why a lot of people trade this is that it causes a huge volatility in the market. When there's a huge volatility in the market, there's a huge short-term volatility in the market. Traders are looking for that because they are looking for that short-term movement in the market to kind of benefit out of it. Okay, so according to the BLS, non-farm employee classifications account for approximately 80% of the business sectors contributing to the GDP. And this is the reason why there's a lot more focus on the NFP compared to the unemployment rate. Now, I'll explain the unemployment rate a little bit later. It's not that the unemployment rate is not important, but the sampling size in terms of the NFP number, it is much more accurate because 80% of the survey, those are companies that contribute to the GDP numbers. Okay, so that's the NFP. That's one part of the equation. The other part of the stuff that we're going to be looking at is the unemployment rate. So the unemployment rate is calculated in percentage, and it is published at the same time as the non-farm payroll report. And the unemployment rate represents the proportion of the labor force that is currently not employed but is capable of being employed. There's actually one subsection of this that's called the U6. We never talk about it. I'll probably talk about it tonight because we do want to talk about that numbers as well. Right. So the unemployment rate itself represents the proportion of the labor force that is currently not employed but is capable of being employed, i.e. they have to be registered somehow to be able to be part of the survey, right? And the reason why I say the NFP number gives us a much bigger sampling size, it is a much more important numbers to look at because the unemployment rate is only determined through a survey of approximately 60,000 households. That is not a lot, right? I'm talking about hundreds of millions of people in the US, and to kind of say, hey, the US unemployment rate is such and such based on the sampling of 60,000 households, you guys get where I'm going, but it is what it is. This is what we are going to be looking at, but just from my personal point of view, there is a reason why the unemployment rate, it's typically not the main focus unless it's necessary to be the main focus. It's because of the sampling size. Okay, so according to the US Bureau of Labor Statistics, for an individual to be classified as unemployed, they must meet the following criteria. They must be without a job. They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. If a person doesn't meet this criteria, they are not considered unemployed for the purpose of calculating the unemployment rate. Therefore, to meet criteria 1, 2, and 3, for you to actually be part of the survey, you need to have your unemployment claims benefits, right? So you need to go to the government and say, hey, I'm not working, I'm looking for a job. In the meantime, can I get some handout from you guys, just to help out? So this is the reason why we saw that the weekly unemployment claims every week moves the market a lot, because people that claim the unemployment benefits are basically the people that are going to be part of the unemployment rate. And from there, we can kind of get a little bit of a figure in terms of, okay, a lot of people are claiming the unemployment claims benefit every single week. So do we see the NFP numbers dropping down? Do we see the unemployment rate increasing and whatnot? That's where we get our calculations from mostly. Okay. So the difference between the two, the unemployment rate, if it goes up, is actually bad for the economy, right? It's actually bad for the nation if the unemployment rate is high. If the unemployment rate goes down, that means the labor market is strong. Less people are unemployed, and that's why the unemployment rate went down. Okay, so the way we look at this is for both of this data set to be beneficial for the US economy, you want to see a stronger NFP, and you want to see the unemployment rate goes down or at least remain stable. All right, that's how we look at things. Okay, so if we have a mixed number, And this is the problem that a lot of traders that trade the NFP, kind of fall into. It's like a trap, right? Because they're only looking at the NFP numbers, they never pay attention to the unemployment rate. If we have a high gain in the NFP numbers and at the same time we have a high gain in unemployment rate, there's actually a mixed data. We could see a lot of whipsaws in the market. Okay, and this is why we need to cover all of this data. Okay, the last set of data that we want to be watching or keeping an eye out for is the US average hourly earnings. This is usually more important when we have a period of high inflation. Right now we do have a little bit of a deflation in the global economy, so not really the main focus except for Japan at this point in time, but the US average hourly earnings is basically released by the Bureau of Labor Statistics as well, alongside the unemployment rate and the NFP number. It measures the average hourly earnings of workers in the US economy. Data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. Economists, investors, and traders closely monitor to this report, as it can offer valuable insights into the state of the US economy and its potential impact on inflation. So when trading based on the US average hourly earnings data, traders often scrutinize changes in a wage growth rate compared to the previous month, as this can signal shifts in the labor market and potential inflationary pressures. Okay, a higher than expected wage growth may indicate potential inflationary pressures, right, which can result in higher interest rates and currency appreciation. So the logic here is that if we earn more, if people are actually earning more, then they actually have the capability to spend more. And if people are spending more, it could actually push inflation up. This is what we look at when we talk about wage, cost push inflation or, wage push inflation, right? So we want to see whether or not people are actually earning more. If people are earning more, then they are likely to spend more because they have more buying power. And that's the concern that we have here. Okay? So that's something that we are going to be looking at as well. Typically, again, this is probably more important during periods of inflation because we do want to know if inflation is picking up or not. But right now we're in a period of deflation, so it's actually not really that important. Okay, but again, if it's way higher than what the market consensus is, we should factor it in. I think the market could take that in if all the other numbers are not, favorable to them. Okay. Okay. So there are going to be 4 trading strategies in terms of how we look at non-farm payroll. We do want to focus on the second one, but let's take a look at all 4. Right? We can do pre-NFP trading. So potential strategy is to trade the market's anticipation of the NFP data release. This approach involves opening positions in the days leading up to the NFP release with expectation that the market will begin pricing in the anticipated NFP outcome. And you basically need to close your positions before the actual NFP release to avoid the extreme volatility that can follow with it. And the second one is the straddle strategy, and this is something that we're going to be looking at, tonight. But if you want to know more about it in terms of, okay, what are we specifically looking at? There are rules to follow. There are going to be, requirements before we can actually deploy the straddle strategy. We are going to be covering that on our session next week in terms of our theory and practice sessions. Okay, so straddle strategy involves placing 2 pending orders, a buy stop and a sell stop, above and below the current market price just before the NFP release. That's basically what we're going to be doing tonight. So this way you can potentially profit from a strong price movement in either direction. Once one of the orders is triggered, immediately cancel the other order to avoid being exposed to further market fluctuations. So the idea here is if one of the orders are hit, you need to cancel the other one. You need to start setting your stop losses, your take profit levels, and you have to do it really quickly because otherwise we typically saw whipsaws in the market. So if you didn't close it fast enough, the market could go in one direction. For example, it might take out your buy stop, it opens a buy position and then reverses and take out your sell stop all within one candle during data's release. Sometimes it happens. I think it happened to us a couple of times this year. I think about 2-3 times. But typically, if not, then yeah, we'll get more of a one-way direction like last month. That was pretty easy session there. Okay. All right, the third one is actually fading the initial move. So the strategy involved waiting for the NFP release and observing the initial market condition, market reaction. Once the initial volatility subsides, you want to look for opportunities to trade against the initial move. This approach is based on the idea that the market often overreacts to the NFP data and that a retracement or a reversal is likely to follow. Okay. So we'll talk more about the post-NFP trading once the data has been released. I do want to talk a little bit about the comparison into the data that we have here. Top one is what we saw last month. Okay. So last month we were looking at 142. Consensus was 140,000. We got 254,000. Right. That was a huge jump up above the consensus. The unemployment rate, we're expecting it to be steady at 4.2%. We got a drop to 4.1%. That was last month. All right. Average hourly earnings, we saw again. Average hourly earnings for this time around, we do expect the average hourly earnings to kind of drop down a little bit. Right. In fact, if we take a look at the data set for this today, right now, in the next 10 minutes, the NFP numbers is expected to come in at 113,000. On Monday, when I posted the outlook, it was still at 140,000. Okay, so market expectation is pretty low. 113,000 gain, it's pretty low. Unless we have a surprise 84,000, it's very easy for the market to be above the consensus. It doesn't have to be 200,000. It can be above 150,000, and it could actually trigger quite a rally on the US dollar. Now, the unemployment rate is also important here tonight. 4.1%. See whether or not it moves, right? If it comes back to 4.2%, then next week we expect the FOMC to cut rate again by 25 basis points. However, if the unemployment rate slows down to below 4%, for example, we got 3.9%, then there's a high chance market is going to price in that next week the FOMC is not going to cut by 25 basis points. And this is the last set of data before the FOMC decision, which is on the 7th of November. And the reason why the labor data is more important, because the shift in FOMC's decision, they have shifted from inflationary pressures to the condition of the labor market. And this is the reason why this is much more important than the CPI numbers right now. Okay? So that's that. And then we have the U6 unemployment rate. If you're wondering what the U6 unemployment rate is, those are the number of people that have stopped looking for a job or kind of given up that they're going to be getting any jobs at all. Okay, so let's go to the chart right now, and I'm going to lay down a couple of stop orders that we have here. And the Euro USD, I actually do have a limit order down below. Up above that as a sell limit at 1.10. I'm actually going to leave that there. But we do want to jump in right now into the 50-minute time frame. All right. In terms of range here, we do have a couple of range. In terms of the buy stop, we do want to have it at 1.0890. A little bit higher than that, 1.0890. All right, that's the buy stop. It's not rocket science. We do have the corridor of volatility right now on the Euro USD, so we do have this range here, and we basically want to place our orders outside of this range. And the sell stop is going to be below 1.0850. That's going to be about 1.0845, right? That's pretty much it for the Euro USD. So we do have the buy stop and the sell stop. The buy stop again is at 1.0890. Sell stop is at 1.0845. Okay. Now the pound USD, this one here, unfortunately, we're not able to create a buy stop here, but we can take a look at the Fibonacci retracement here. We'll probably trade this after the news is released, but right now there's a little bit of a resistance building up here. In terms of buy stop, you're not able to do a straddle here because we don't have that sideways market condition. As you can see, market has been continuously grinding up, right? Let's see if I can pull that There we go. So the market has been moving up. We actually don't have a buy stop. You can have a buy stop if you want to, about 1.2940, but I wouldn't do that, right? The reason why I wouldn't do that is because, you know, overall we're still within that retracement cycle that we're looking at on the hourly time frame on the pound USD. So we do expect a little bit of a resistance building up. You might be able to use a limit order here at 61.8%. That's about 1.2950, and if you do that, your stop losses are going to be about 1.3. I'll wait for the data to be released before we act on this one here. All right. Dollar yen, at least on the dollar yen, we do have a sell stop. The sell stop is going to be below 151.75. About 151.70 is about the sell stop here. The range is going to be huge for the dollar Japanese yen. So just keep that in mind. If you're not comfortable, don't do dollar Japanese yen because the range is huge. In terms of the buy stop, we're looking at a gain above 153 before it's going to trigger a buy for us. And let me just put this into perspective. The range between the buy stop and the sell stop, it's about 140 pips. So yeah, this is not for everyone. Okay. The Aussie USD, this one here, you do have a little bit of a buy stop here. I do want to have it a little bit higher for the Aussie USD. Ideally, buy stop is about 66. It's way kind of a bit too high. So you're able to have it at 65.85 if you want to, but the sell stop right now we can have it just a little bit tighter, about 65.50. All right. Okay, gold. This has to be really quick, but if you want to do a buy stop on gold, I already have a position on gold here, but if you do want to have a buy stop, you do want to have it above 2,759 for a buy stop, and your sell stop, it's going to be below 2,745, about 2,744. Okay. That would be the sell stop and the buy stop for gold. This one here, typically with gold, for the past few months, we don't see a direct move. If we do have a trade triggered in gold, we need to close it out in the first 50 minutes, okay? Okay, dollar Canadian, you do have the buy stop if you want to, but right now it's kind of still pushing a little bit higher to the upside, so just be mindful of that. And the dollar Swiss right now, we don't have the straddle because the market has already reasoned about that. In fact, this is kind of forming. It is still facing a little bit of a resistance, but we'll revisit dollar Swiss at this point in time. We don't know whether or not this is actually transition above the resistance trend line, has been tested as a support. Could it be forming a little bit of a flag? Those are the considerations that we need to take into account for dollar Swiss at this point in time. The US 30, we don't have the straddle condition. For oil, we don't have that. Yeah, yen crosses, we're going to avoid yen crosses at this point in time. So we do have our Euro USD. Pound USD, we are looking at whether or not price is actually able to fail. This is really data dependent. So we'll revisit pound USD and was it dollar Swiss? All right, so we'll visit dollar Swiss and pound USD in a minute. All right, data should be releasing anytime soon. And we do have the ISM manufacturing numbers as well at 9. All right. Datas. Any moment now. All right, it's pushing up. I think Euro USD has triggered a buy stop, so I need to cancel the Euro USD sell stop. Market's really moving really quickly. The NFP, wow, seriously? 12,000. That is so low. That is so low. 12,000 is so low. Unbelievable. 12,000. All right, I'm looking at market reactions here. Euro USD right now, dollar yen is pushing down. Whether or not it's going to trigger a sell stop or the buy stop, it's not triggering anything right now. Gold has been triggered, right? So I need to kind of close out gold sell stop. Aussie USD also has been triggered, so I need to close out Aussie USD, Euro USD as well. Dollar yen are the only two stops that it's not triggered yet. I think the pound USD should be rocketing up, so we'll see. Pound USD is pushing up higher. We do have resistances at this point in time. Kind of a little bit too late to jump in on pound USD. All right, so let's monitor this one. We might actually close out some of the trades here. If we don't see a lot of price movement happening in the first 50 minutes, the other breakdown that we have, the unemployment rate is at 4.1%. Everything other numbers there, it's pretty much okay. The NFP gain is 12,000. Previous month was revised down to 223,000. This is ridiculous. 12,000 gain. That's near zero. Yeah, earning is okay. Earning is what, 0.4? That's fine. Earning is fine. Average hourly earnings yearly, it's as per consensus at 4%. That should be fine. Yeah. Wow. 12,000. I don't even know what to say about this. I think the only thing that's propping up the US dollar at this point in time is probably the US election right now, with the anticipation that Trump could actually be winning that election. But I just don't see, look, I'll be honest with you. It is a pretty low number, right? But as I said, it's not really that much of a surprise because market has been anticipating that numbers could be a little bit lower because of the hurricane as well as the strikes. So, if we take a look at these numbers, I think what we are looking at here is that, yeah, the FOMC is probably going to be cutting 25 basis points next week. All right, we just get the NFP numbers; it's just so low there. Obviously, this is not really a surprise. Now, I think the market is taking it pretty okay, right? At this point in time, it's not like you see the market just shoot up really quickly there because the number is just way too low. It's 12,000. It's so last month we have something that's above 110,000, above the consensus. Right now we do have a number that's actually kind of 100,000 below the consensus. So it's actually really interesting. Look, I don't see a lot of price actions at this point in time. So for gold, it's good to start having your stops in place. I am not liking the current movement on gold because it has to move up within the next 15 minutes. If it doesn't move up in the next 15 minutes, we need to close out the position on gold. It just means the market doesn't have enough momentum. Everything else is the same. The Euro USD right now, in the next 15 minutes, if it doesn't move, no matter what it is, we're going to close our positions. But for your stop loss, just in case, you need to have your stop loss at 1.0850 on the Euro USD. The Japanese yen that you're looking at here is not from this trade. Dollar yen, we haven't hit the sell or the buy stop here. The Aussie USD, we did hit the buy. I think this one was dragged up. Price didn't go up there. I think it was a little bit of a slippage. But the Aussie USD, because it didn't cross over, I would actually close my Aussie USD on this one here. It should be open. Again, for gold, monitoring this one. If it doesn't move in the next 10 minutes or so, we need to close out the position. Dollar CAD, we're not out of the range on the dollar Canadian. I think this is just a sideways market condition that we're looking at here on everything else. Dollar Swiss right now, as I say, this one here was kind of questionable in the first place. It wasn't long enough for it to be considered a flag. In terms of whether or not the resistance kind of holds, that has to be tested. So we kind of stay clear of the Swiss. Pound USD, unfortunately, I don't think we're able to continue buying on the Pound USD at this point in time. This is probably going to run up close to 1.3. It'll test the resistance at 1.3 and it'll probably fail at 1.3 at this point in time. Everything else, I don't see a lot of price movement. Euro yen stable, yen crosses are all stable. Euro USD just not. I don't see the oomph that we are kind of expecting in the market there. So yeah, might not want to stay too long in the trade. In fact, it doesn't look quite good if it doesn't push up really quickly at this point in time. It is a very interesting release though, 12,000. I don't think anyone kind of expected 12,000, but it is what it is. All right. So let's take a look at the pound USD, at least on the early time frame, see if we can actually fade this. You know, I'm looking at this. I think there's a potential for us to actually fade the trade. Reason being is the pound USD is coming back into the previous range that we kind of anticipate this to be kind of, you know, where markets are actually going to be stuck a little bit, right? We're looking at that, and we're also looking at the resistance one here. Resistance one and the Ishimoku cloud is located at 1.2980. Um, Price is currently at 1.2957. If you are thinking of, you know, doing a limit order on the pound USD, you can do that if you want to, but your stop loss has to be really tight on the pound USD. Yeah, it's really moving up really quickly though, so you're kind of anticipating a little bit of a failure here. That failure would actually come in around this level, but you know, at this point in time, I would manually monitor this instead of opening a limit order, just, you know, just because. Okay. So yeah, dollar yen, the buy side and sell side, we need to close out the sell stops that we have here. We just don't have that explosion that we're looking at right now. So the Euro USD is the only trade that's currently running, as well as gold. Again, you know, right now depends on your positioning in terms of where you got in for gold. You want to play it safe. You can move your stop loss for gold to break even if you want to, because right now in the next 10 minutes it has to run up really quickly. If it's not moving up really quickly, then we need to kind of steer clear, because take a look at the Euro USD. It's breaking out to the upside. We are barely, you know, 1 pips in terms of gain. It will probably be revised, right? I agree with you. 12,000 is just so low. But yeah, should we fade it? Is this 12,000 NFP gonna bring US dollar weaker? That's the question. And the thought is, I don't think so. Right? It might be in the short term. We might actually see dollar weakness at least today. But if we don't see that movement in the next hour or so, it's, the lower NFP number is expected, right? The unemployment rate is stable. I think that's a good number. Okay, the expectation for the NFP for it to actually be lower, it kind of falls into some of the numbers being contributed to, states being affected by the hurricane, as well as strikes. But yeah, the market is kind of expecting a lower number. It's just crazy low, 12,000. But I don't really see a shock in the market. If the market is shocked right now, the Euro USD would be back above 1.09 easily. It would probably be approaching 1.10 at this point in time. I'm just not seeing that. So can we fade this? Not sure how to handle the euro at this point in time, but dollar yen, that's actually very interesting in terms of the dollar yen. Dollar yen has been pressured a little bit lower. There are other factors involved in terms of the movement on the dollar yen here. But for the dollar yen, we're looking at, coming back to that 152 level. We do have a little bit of a support coming in 150, 150. We saw that bounce, and yeah, it might have a lot more room to go to the downside. I think you can push a little bit lower, So pay closer attention to 150, 150 or 151. If it's able to reach 150, 150 and bounces up, then yeah, some people might actually be looking into buying that. But looking at the speed and the data, I think short-term bias for the US dollar is actually going to be to the downside. Just simple as that. Okay. So I probably wouldn't recommend fading anything at this point in time. But I think we're gaining momentum. I think market is starting to come and take a look at this and say, oh wow, 12,000. We still have the ISM manufacturing numbers, so that's going to be 9 my time. It'll be in an hour and a half. I don't think it's actually going to be a huge impact, but it's, it could move the market as well. Yeah, the US market hasn't opened yet. The US market is opening in about 20 minutes time. A lot more activities happening in about 40 minutes time. It's a joke, right? Or the US Bureau of Labor Statistics printing the wrong number. I think goes right at this point in time. I don't think it's a wrong number. All right. Yeah, I see the news now. This happens because of hurricane. Yeah. So it's kind of expected. So this is probably why we don't actually see a lot of firepower behind all this. But yeah, it's a very interesting number. Can we look at the stock market? Yeah, we can look at the stock market, but the stock market is not open yet. I don't think we can actually live trade the stock market, but I'll take a look at the stock market. It is actually a good thing. Someone actually requested a stock market, and just in case you don't know, Octa actually offers stocks like Nvidia, which has been crazy, a crazy performer for the year, right? The gains has been crazy. The AI run has been nuts. I think for Nvidia today, I think the stock market is probably, there was some adjustments yesterday because it's kind of end of the month adjustments, right? And also before the election. So this one here for Nvidia, it might actually find a little bit of a support right now at 130. Pre-market is kind of scheduled at 134.60 there. So it'll be interesting, but for Nvidia, as long as it's above 120, 123, 124, should be good. We're still above the Ichimoku cloud at 120. Any prices above that level is still considered to be a buy for Nvidia. Ideally, you can see that push lower because we actually want to see that broken resistance become support. Then, ideally, we do want to find support at 124, 120, at least for Nvidia. But pre-market is kind of scheduled to be opening at 134. So just keep that in mind. Yeah, opening is 9:30 a.m. for the stock market. It's actually 9, right? Because you have half an hour pre-market trading as well. But yeah, typically it kind of kicks off at 9:30. So at 8:30, right? Is it 8:30 or 9:30? I need to take a look at my time difference here. But yeah, my time is about 9:30 at night. Okay. All right. So what's the other one? Apple is pretty stable. I don't have an issue with Apple. Pre-market is set to open a little bit lower, 221,000. As long as it's above 215,000, it should be okay. Next is what? Qualcomm? Meta? Meta for me it's always a good one. I think Meta should be strong enough to hold. Weekly pivot right now, it's pointing at about 560. You're gonna be looking at 550 to 560 as a support for Meta. All right, Qualcomm. So yeah, if you don't know, you can actually trade all this. You want to trade Netflix, you want to do Tesla. Octa does offer this on their MT5 platform. You might be on MT5 and you don't realize that you are actually able to trade individual stocks. And I think it's a good option to kind of expand your portfolio here. Qualcomm, not looking good for Qualcomm. I think could open up a little bit higher, 163. I do find this resistance to come in at 165 to 170. If it fails at 165 and 170, then yeah, you can probably kind of continue to short Qualcomm. Obviously with Qualcomm, I think there's an issue with ARM right now. It's more of a contractual negotiation, so it's not going to affect it long run. I think it's a good price. I think it's a cheap price. About 150. It's a good price to pick it up for Qualcomm. I think this one here has retraced a lot. But yeah, right now it is kind of under pressure at this point in time, so we'll see what happens here. But is there room for this one to go lower? Yeah, 155 to 150. If you can get it at that lower price, I think it's a much better buy. Okay, so let's go quickly back onto the forex market and see what's going on here. All right, as I said, with gold, we're 1 minute in. We're not holding on to our gains. I'm closing out the positions, right? Waiting for that extra minutes. It's been 50 minutes. And look, we're not gaining. The Euro USD and gold right now is not gaining at all. So yeah, I actually want to get out of gold at this point in time. It's just not looking good. So it's kind of like the market is already expecting, that the NFP numbers could actually be bad, number one. Number two, whether or not it's actually bad, whether or not it's actually going to be good, if we don't have a stronger number, then there's no risk to the FOMC not cutting interest rates. So the FOMC has been pricing to cut 25 basis points next week. And looking at these numbers, they need to cut 25 basis points. It's on schedule. I don't think they're gonna hold it off. They don't have enough reason with the the number that low at 12,000. So that could be a boost, right? So lower interest rates, and then the upcoming U.S. election also plays a very important factor here. But yeah, in terms of dollar strength, in terms of whether or not it's actually going to be affected by the NFE numbers, I'll be honest with you, the answer to that is probably not. Okay. So this is why we need to take a look at the context of the NFE release, because if you don't factor all this in, you're gonna look at that number and 12,000. Wow, that is so low. I'll just go all in on the Euro USD, Pound USD, and gold, and you might not see that price movement there. And right now, the Pound USD is kind of climbing up. I'm just looking at this. It's more like, okay, I'm priming my time here for Pound USD to kind of fail, right? So if we take a look at a Pound USD, this one here is actually very interesting. A couple of resistances building up. Obviously, it's 78.6. It's I think we're already at that level. Yeah, 1.2965. You're already at that level. I focus a lot more on the area around the resistance one. That's where the Ishimoku cloud is located. The reason why I probably wouldn't want to trade the short on pound tonight, all right? And I know pound with Pound USD, if it goes up, even though it fails to go above 1.3, but stayed above this level here, 1.2950 for today, by end of the day, it will transition above the Ishimoku cloud where it could actually bounce on Monday. So that's the reason why I'm not really looking into a short position here. You know, if I don't have the Ishimoku cloud with a thin cloud like that, then yeah, I'll probably start thinking, hey, you know what, this is a good place to short it. You can still do that, right? You can still do that limit trade if you want to. Your stop loss is about 20 pips if you want. In terms of the positioning, you can have it at 1.2980. You want to stop loss a little bit higher, you can have it at 1.3010, but no more than 1.3010. That's the maximum limit if you're trying to catch the top on the Pound USD. But considering the situation that we have here, I probably wouldn't trade that limit orders, okay? Just because the Ishimoku cloud is there, and if price is able to maintain a position above 1.2950 tonight, by the end of the day, it will be above the Ishimoku cloud. On Monday, it could bounce back up. So just keep that in mind, okay? Euro USD on the hourly time frame, and this is gaining. Let me just remove a lot of the stuff here. We are facing a little bit of resistance at 1.09. R2 is 1.0925. I think there is actually room for the Euro USD to grind up higher. Let me check the Euro Pound. Yeah. Okay. So the pound might be stopped on its tracks, right? But the Euro Pound, it's definitely still very positive. I think the Euro could actually be stronger than a pound today. So just keep an eye out on that one there. If you have, you know, a long Euro position, I think that should be okay. Long Euro position, I think we need to kind of set our target for where we're going to be aiming for today. It is currently stuck at R1, but if stochastics crosses over in the next hour, then there's actually room for this one to move higher, 1.0950. I'm not saying it's going to run back up to 1.10, but I think at a minimum, we are going to be looking at the Euro returning to 1.0920. That's something to keep an eye out for, and that could very well be our target level for the Euro USD. This one here, I'm just not looking at a lot of momentum here, and if I push that to 1.0920 and where my stop loss is, it doesn't click. My risk reward ratio just doesn't make sense, right? So, you know, Euro USD, honest opinion, it could go up. It could go up, but I'm not seeing that push. I just don't see enough fuel going on here. I don't see the market being shocked that the number was low at 12,000. That could actually impact the US dollar. I'm just not looking at that. And, you know, this kind of reactions here, we need that to happen in the first 50 minutes. Otherwise, we're going to be out of time on this one here. You know, you could wait for another 10 minutes, but looking at the current situation on the Euro USD, I'm at break even. You know, I'm not liking this. So let's just close that out. The dollar yen position that we have here on the buy, I would keep that. The dollar yen, as I said, this is not for everyone, but if you are keen on the dollar yen, you know, we're going to be looking at support at 150, 150, or 151. If it's able to kind of hang on there, didn't break any lower today, then yeah, I think it's a good lower place to kind of buy the dollar yen. But a Euro USD, you know, I don't like how the build up on the momentum is. So make sure your stop losses are tight. If you have that long position, make sure your stop losses are about 1.0850. It's just that I closed this out because my risk reward ratio doesn't click anymore. The risk reward ratio, if we take a look at this one here, if I still have that long position there, my stop loss is at that low there, 1.089, 1.0850. Our target is going to be R2. The risk reward ratio is below 1 to 1, and that's the reason why I take it out. Right? Can it go higher? Yeah, it can go to 1.0940. As I say, it can go to 1.0940, 1.0950. If that's going to be your target level, then it's okay to lift the position. It's just that I don't see that firepower at this point in time. I don't see this rocketing up really quickly on the Euro USD. So, I'm not liking the momentum that we have on the NFE numbers tonight. It's such a bad number. If it has a huge impact on the dollar, it should have an impact by now because it's such a huge miss, right? Just not looking at that. Okay? All right. We have about 9 minutes left. Any other requests for tonight before we continue on with the slides, just in case? But all the trades that we have here for tonight has been closed out. I'm not liking the gold and the euro. We're just not looking at enough movement there. And you can see the movement here on gold. It's kind of like stuck, right? You're probably going to be around break even, but we're not gaining really quickly at the same time. That was such a bad number. It should have rocketed up really quickly, but we're not looking at that. Nasdaq? Yeah, let's take a look at Nasdaq. All right. Whoo. Nasdaq. I think Nasdaq has, because of that, I would say close of the month last night. But anyway, it's still holding on above 20,000. Can this one drag a little bit lower? I think we're breaking a couple of support here for Nasdaq, at least on the daily time frame. All right. We do break a lot of support. We are below Kijun. Logically, I think we should retrace a little bit lower on Nasdaq here. But let's check on Nasdaq on the daily time frame and see what the movement is. What's the positioning? Yeah, I think for the positioning here, we're probably going to find resistance at pivot. Okay, so we are obviously below that level there. I think this is kind of struggling there as a potential support. Stochastics kind of failing here a little bit. We might find a little bit of resistance where the Kijun is going to be located. So I would go with a little bit of a limit order if you want to, right? I would probably have the limit order at about 2080, right? Your stop loss, you cannot have your stop loss too far. Max is going to be about 2120, all right? That's max, right? Target level, we're going to be looking at a return towards, we're hovering above 20,000 at this point. It's actually not a bad level at all. But yeah, I think in terms of how far I can go, I think we can go a little bit lower here. Now, a couple of things in terms of looking at this, we need to identify where the pivot is, right? We will make adjustments. Okay, the pivot is at 23.6%. And the reason why our stop loss is, it cannot be higher than 20,120. Because any push higher than 20,120, it will transition above the Ichimoku. Sorry, it will transition above the 23.6% retracement. That could lead to a much higher pullback towards resistance one. That's going to be about 20,300, 20,281. That's how far it can pull back up. So it is. It's a risk that is okay to take, I would say. Right? Because otherwise, if price goes above 23.6%, you got your stop loss anyway at 2120. Because the reason why you can't drag this any higher. Any move above that level, it's likely going to push this towards R1. So if this fails, if your limit order fails today, hits your stop loss, you have to reverse the position immediately. And by reversing the position here, you want to have your stop loss really tight as well, but you want to be targeting somewhere inside that Ichimoku cloud. That's about 20,250. So, about 40 up, 40 down, that's going to be your risk factors for tonight. But yeah, for now, still focusing on whether or not it could actually surpass the pivot level. Um, Looking at where the pivot level is located, it's actually very close to the Kijun Sen, which is the baseline on the Ichimoku. You might actually find that resistance. That's about 20,100. That's also a psychological price level. So expect a little bit of resistance building up. We might see price failure around those levels there. Market could open up and say, hey, this is such a bad number. This is 12,000, right? Well, let's take the equity. Equity has been, running on a bad day. Yesterday, it could continue on today, especially on Nasdaq there. All right, gold, we covered gold, and for gold, just now we just don't have enough movement on. We just don't have enough momentum on gold, so we kind of got out from our positioning. Look at that. This is where it's stuck. This is stuck at the pivot level. This is also stuck at the Kijun Sen, or the baseline on gold. It's on the hourly time frame. It's still below the Ichimoku cloud. We had a buy just now. We didn't have enough push. Getting off that buy. No fades tonight. Not risking a fade at this point in time. All right. AMD, we covered AMD. No, have we covered AMD? No, we haven't covered AMD. AMD more or less should be about the same with everyone else. The AMD at this point in time, this is transitioning below the Ichimoku cloud. I think this one here can go a little bit lower than 140. Currently market is expected to open at 145. I think this one here could come down and test 140. So for AMD, not buying yet. Not enough conviction to buy, and also positioning on price here is below the Ichimoku cloud, and it has been so for 2 days, so not doing that. All right. Unemployment rate at above 4%, 25 seems like too small in my opinion. Probably not. It's per schedule, because the expected cut for this year is 100 basis points. We had 50, 25, and then December 25. If they cut 50, then they will say we'll stop at December. We're not going to be hiking in December, but that would disrupt the market before election. That's not a good idea. So they'll probably cut 25 and they'll do December at 25. Okay. All right. Okay. Let's go back to this one here. Again, I do want to talk to you guys. When trade post NFP, like the couple of trades that we are looking at just now, it's post NFP trades. But just to remember, when trading the news, you need to manage your risk. You need to always stay informed, updated to any changes in terms of market reaction. And what's really important here, it has to be flexible. You have to be prepared to adapt your strategy based on the actual NFP data and the market's reaction to it. So, i.e., we're looking at the data there, it was low, 12,000, right? We got a couple of stop orders being triggered. I just don't see the sentiment in the market being on the same side as the data being released, right? And not looking at that in the same way. Because why? Market is already expecting the number to be a little bit on the lower side. And it's a little bit too late to do anything. The FOMC schedule or has been priced in to cut by 25 basis points. So it's not really that huge of a surprise at this point in time, for the US dollar at least. Okay? All right. So, in summary, there are going to be three main strategies to trade the news. Strategy based on two-penny order setting. That's stuff that we do just now. You can also trade before the data is released. You can trade after the data is released, like how we plan some of the trades here for tonight or up until Monday. That's trading after the data has been released. Okay. Obviously, for more effective trading, you can combine these strategies. Okay. So this is going to be the code again. It's Nonfarm 2024. It's still valid until the 31st of December 2024. Jot this down just in case you need it. We still have a good 2 months here for the code to be valid, right? It's not going to be expiring until the end of the year on the 31st of December 2024. Still a good 2 months. Okay. All right. So I think we already answered some of the Q&A session. So what's next? Next is going to be our news trading theory and theory and practice. I'm just looking at the schedule here. Let me just get this right. I believe we are going to be doing this on the 14th. No, on the 7th. Or the 6th of November, but it should be already on the YouTube channel. Just make sure you get the dates right. I think for the CPI number is actually going to be on the 13th of November. That's going to be the CPI release. All right. So next week you're going to cover the theory. If you guys are watching this and wondering, okay, why are you not doing this on the Pound USD? Why are you not doing this on all the other currencies there like the dollar Swiss? because there are rules to follow in terms of using the stops, sell stop and the buy stop, right? So for a straddle, although it's a simple strategy, there are still rules to be followed. There are market conditions that needs to be recognized before we can actually deploy those. All right, so we'll explain that next week on our theory and practice session, and then the week after that, on the 13th of November, we will be doing our live CPI trade. Okay. All right. Cool. Let's wrap it up for tonight. Good luck with your trades. Don't forget the US election is going to be on Tuesday. That's going to be on the 5th of November. Trump and Harris, the polls are about even right now, 48-48. That's the last polling that I've checked. However, some of the calculation that's been done in terms of estimating the potential results, I think Trump is actually leading, the election at this point in time, even though the polling is at 48, right, percent right at this point in time. All right, and then on the 7th of November, the FOMC is going to be releasing the interest rate decision. There's going to be a 25 basis points cut that's already been priced into market. And looking at the data today, I think that 25 cuts, it's alive on the 7th of November. So the surprise next week is probably just going to be coming up from the election, which is probably good. All right, so with that, good luck with your trades, and I will see you next week.